Thank you, Mr. Secretary. Superintendent Neiman?
Thank you. Mr. Secretary, the new Treasury Servicer report on mortgage modifications represents I think, an important step in data access and accountability. But it also confirms in the report just issued this week that there are wide disparities among the rates of modifications. Some firms, as you well know, have not started any trial modifications, while many more firms have really start rates in the low single digits. You held an important meeting with servicers on July 28th to discuss these very issues. I was also encouraged yesterday to hear Assistant Secretary Barr's House testimony with respect to new commitments that have been made in key areas such as the speed of implementation, data collection, and borrower outreach. Now, the report that was just issued shows that there are trial modifications started in the numbers around 360,000. These would indicate really only about 12% of estimated eligible borrowers. Secretary Barr indicated that servicers have committed to increase that number to a total of around 500,000 trial modifications by November 1. You know, based on that, your benchmark of reaching 3 to 4 million homeowners are at risk, are you satisfied we're on that track? Have we set realistic expectations? And even more importantly, is there real risk and challenge in converting those trial mods to permanent, sustainable modification?
You described the facts and the progress and the challenges absolutely right. It's not enough just to have sent out $1.8 million of solicitations to participate in modification, which is the numbers we've approached now, or almost that level. It's not enough that you have something like in the close to 500,000 offers extended. It's not enough that you have more than 350 households now benefiting from substantial reductions in mortgage interest rates. You need to make sure those are converted into things that are going to work over time. And we are very focused on making sure this program reaches as many eligible homeowners as possible. Two important things to point out. It is very helpful to do what we just did, which is to put in the public domain every month detailed numbers that allow the American people to see how many people these banks are reaching. And I am quite confident that will produce much, much faster modifications much more quickly, because institutions do not want to live with the consequences of being so far behind the curve of what is possible in helping families get through this exceptional set of problems. The other important thing we're doing is to make sure that we are going in after the fact and looking at whether people are denying eligible homeowners access to modification. So there is it's called a second look program, which that's a softer form of what it actually is, which is a program of auditing to make sure that they are not denying eligible homeowners the chance to participate. So I think we're going to, this is going to reach a substantial share of people that are eligible. But it's important to recognize that this was just one part of a set of actions we took to help stabilize the housing market, bring down mortgage interest rates. And those actions, looked in total, have helped bring down mortgage interest rates to very low levels and have helped bring a measure of stability to housing markets, housing prices, housing activity faster than many economists had forecast. And fundamentally, it is that broader measure that should be the ultimate test of this program.
I think I'd be interested in your comments about the continued obstacles to effective and increasing the effectiveness of servicer participation. I'll do that in a follow-up QFR. But what we're hearing and talking to servicers is there is still concern about outreach, getting documentation back from servicers. Some creative approaches that I've heard from servicers are because people are not responding to going out physically and visiting. I'd like your thoughts on other creative approaches. I've suggested in the past possibly even letters from yourself or even ideally the President of the United States to assure that people are opening their mail, realizing that this is not just another creditor notification, but a real response and involvement from the government.
Welcome those suggestions. And, of course, we are very pragmatic. We want this to work. And we'll take and act on any reasonable suggestion. I think you're right to point out, for this to work, people need to take some initiative. And they take to find out how to make sure they can get help. But as you're seeing, 350,000 families today have seen a dramatic reduction in the cost of carrying their mortgage in ways that puts more money in their hands at a time when they're going through an enormous challenge. So, the pace of that curve is very rapid.
My 10 seconds
That's our time.
left. I just want to, we will be holding a hearing on September 24th in Philadelphia on this very issue. And we would look for support from your office to assure that we have representatives from the Treasury and Fannie Mae and Freddie to go over those very programs that you referenced, particularly the second look.
A good use of your extra 20 seconds there.
Thank you.
Thank you, Superintendent Neiman.